Welcome everyone. On today's video, we're going to touch on two real estate investment trusts that I believe have some near-term potential. We're going to make the assumption that the interest rate decreases on both the American and Canadian side will act as a tailwind for these companies in particular. Now, most real estate investment trusts have been going up recently because of this tailwind. However, these companies specifically have a little bit further to go, as I don't believe they're the same quality as the rest of the group. Now, on the Toronto Stock Exchange side, we have Granite Real Estate Investment Trust, ticker symbol GRT.UN. This one pays just over 4% monthly yield. Granite's in a particularly positive position because it is an industrial REIT, so this industrial REIT business should be better and better year over year because more people need warehouse space. Some of their main clients include Magna International and Amazon, so they're not going to be hurting for customers. They do triple net leases, which is really great, and they're just in a great position because they are global. They're not just stuck in Canada. If you compare Granite to other Canadian REITs such as SmartCentres and RioCan, you realize quickly that this one is definitely a cut above. Now, with SmartCentres and RioCan, they've had a bigger pop as of recently actually, so I think they are overvalued in comparison, and they really offer a lot less potential. RioCan specifically, because SmartCentres does have some redeeming qualities still in that they own a lot of land in the Greater Toronto area. But SmartCentres, if you compare it to Granite, they're not in the same class of company in my opinion. Granite is heads and tails above. The main difference is people like SmartCentres because of the huge dividend yield that they get paid monthly. And nothing's wrong with SmartCentres in particular. I'm just saying, if you're not mainly focused on yield, it's probably not the way to go for capital appreciation. Now, I want to touch on the American company that I was referencing in the earlier part of the video that has a lot of potentials, and that is Vici Properties, ticker symbol VICI. Now, this company I talked about in the past, they own a lot of the real estate in Las Vegas. They also do triple net leases. So, all these casinos that operate, all the famous ones, you know their names, MGM. I can't think of another one right now, but on the Vegas Strip, they've been there for many years, and they don't want to change locations. They do not own those locations. They only rent them, and they rent them from Vici. It's the only game in town on that strip that has this level of size and renown. If we take a look here, they have a very healthy yield at 5.22%. This is not paid monthly though, so that is a big turnoff for a lot of you real estate investors. This is paid quarterly, which is pretty different in this industry, but that's the way they decide to do things. Now, I've given you a couple names to look at and consider. I don't want to sway you too much. I just think they're notable, and I think they've got a 6 to 10% gain coming in the next 6 to 12 months. I might be wrong. The interest rates could stop decreasing, and that would ruin my thesis. So, we need a couple things to play out, but if you're looking for good long-term companies to hold that do have potential upside and that do pay good income, Vici and Granite, one Canadian, one American. I hope you guys have a great day and check these companies out. Thanks.